Can the CRA freeze a U.S. business account for unpaid GST, HST? When a U.S. business registers for GST, HST and starts operating in Canada, it takes on legal tax obligations under Canadian law, even if the business remains physically located in the United States. One question foreign companies often ask is whether the Canada Revenue Agency, CRA, has the power to freeze their U.S. bank accounts or business assets for unpaid GST, HST. The answer involves cross-border enforcement rules, collection treaties, and the difference between Canadian assets and foreign ones. Understanding how far the CRA can go is essential for any non-resident business selling to Canadian customers. CRA authority stops at the Canadian border. Mostly, the CRA cannot unilaterally freeze a U.S. bank account. Canadian tax authorities do not have jurisdiction over American banks, American payment processors, or American financial accounts. However, this does not mean foreign businesses are free from enforcement. Canada and the United States have cooperation treaties that allow each country to help enforce certain tax debts when specific legal thresholds are met. Still, the CRA's direct power to freeze assets is strongest inside Canada, not outside. CRA can freeze Canadian assets, payments, or funds. If a U.S. company has any presence in Canada, the CRA can act aggressively on those assets. This includes Canadian bank accounts, Canadian payment accounts, funds held by Canadian fulfillment partners, money owed by Canadian clients, Amazon FBA disbursements located in Canada. Even if the business is American, its Canadian side assets fall under CRA authority. Here are the enforcement tools CRA can use against a non-resident business. Requirement to pay notices. CRA instructs Canadian customers or banks to redirect money to CRA instead of the non-resident seller. Freezing Canadian bank accounts. Any account held at a Canadian financial institution can be frozen for unpaid tax. Seizing Canadian-held funds, CRA may intercept revenue flowing through Canadian processors. Registering the debt as a lien against Canadian assets, if the foreign business owns property or equipment in Canada. Working with U.S. authorities in limited cases when Canadian assets are insufficient. These tools give CRA broad, but not unlimited power. Cross-border assistance under tax treaties. Canada and the United States have a mutual assistance arrangement for enforcing certain taxes. While this treaty primarily covers income tax, the CRA may request assistance for GST, HST debts if the debt is legally established and uncontested. The IRS can help collect GST, HST in limited cases. But this process is rare, lengthy, and only used when a large amount is owed. CRA has exhausted domestic recovery options. The business has ignored repeated attempts to resolve the debt. For most small and mid-sized U.S. companies, CRA focuses on Canadian assets first. Amazon FBA sellers are especially exposed. If a U.S. Amazon FBA seller has unpaid GST, HST, CRA can freeze payments Amazon sends. CRA can intercept payouts. CRA can issue legal demands to Amazon Canada. CRA can assess retroactive GST, HST, and seize funds before disbursement. Amazon cooperates fully with CRA enforcement orders. This makes compliance critical for marketplace sellers. CRA cannot freeze U.S. accounts directly, but can indirectly hurt operations. Even though CRA cannot touch a Chase, Bank of America, or Wells Fargo account directly, they can. Block payments coming from Canadian customers. Freeze money before it leaves Canada. Interrupt cash flow. Issue international collection notices. Prevent the business from clearing shipments at customs. In other words, CRA can pressure a business into compliance even without U.S. account access. A practical example. A U.S. digital services company registers for GST, HST, but fails to file for 2 years. CRA issues multiple notices, then legally assesses the tax debt. The company has no Canadian bank accounts, but Canadian clients owe it money. CRA sends requirement to pay letters to those clients, directing them to send payments to CRA instead. Separately, a U.S. Amazon seller owes $28,000 in GST, HST. CRA instructs Amazon to redirect all disbursements to CRA until the debt is cleared. The seller's U.S. funds remain untouched, but operations in Canada effectively shut down. Final thoughts. CRA cannot freeze a US bank account directly, but it can freeze any Canadian side revenue, seize payments, and intercept funds flowing through Canadian platforms or partners. Through tax treaties, CRA may also escalate enforcement internationally in serious cases. Non-resident businesses should take GST, HST obligations seriously, file on time, and resolve assessments promptly to avoid disruptions. If you'd like more insights delivered in the same straightforward style, you can explore our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.